Accelerated depreciation. Depreciation method that produces higher depreciation expense in the early years than in the later years. Additions and improvements. Costs incurred to increase the operating efficiency, productive capacity, or useful life of a plant, asset. Amortization. The allocation of the cost of an intangible asset to expense over its useful life in a systematic and rational manner. Asset turnover ratio. A measure of how efficiently a company uses its assets to generate sales, calculated as net sales divided by average total assets. Capital expenditures. Expenditures that increase the company's investment in productive facilities. Copyrights. Exclusive grant from the federal government that allows the owner to reproduce and sell an artistic or published work. Declining balance method. Depreciation method that applies a constant rate to the declining book value of the asset in produces a decreasing annual depreciation expense over the useful life of the asset. Depletion. The allocation of the cost of a natural resource to expense in a rational and systematic manner over the resource's useful life. Depreciable cost. The cost of a plant asset less its salvage value. Depreciation. The process of allocating to expense the cost of a plant asset over its useful life in a rational and systematic manner. Franchise. A contractual arrangement under which the franchisor grants the franchisee the right to sell certain products, provide specific services, or use certain trademarks or trade names, usually within a designated geographic area. Going concern assumption. States that the company will continue in operation for the foreseeable future. Goodwill. The value of all favorable attributes that relate to a company that is not attributable to any other specific asset. Intangible assets. Rights, privileges, and competitive advantages that result from the ownership of long-lived assets that do not possess physical substance. Licenses. Operating rights to use public property, granted to a business by a governmental agency. Materiality concept. If an item would not make a difference in decision-making, a company does not have to follow GAAP in reporting it. Natural resources. Assets that consist of standing timber and underground deposits of oil, gas, or minerals. Ordinary repairs. Expenditures to maintain the operating efficiency and productive life of the plant asset. Patent. An exclusive right issued by the U.S. Patent Office that enables the recipient to manufacture, sell, or otherwise control an invention for a period of 20 years from the date of the grant. Plant assets. Tangible resources that are used in the operations of the business and are not intended for sale to customers. Research and development costs. Expenditures that may lead to patents, copyrights, new processes, or new products. Revenue expenditures. Expenditures that are immediately charged against revenues as an expense. Salvage value. An estimate of an asset's value at the end of its useful life. Straight line method. Depreciation method in which periodic depreciation is the same for each year of the asset's useful life. Trademark. A word, phrase, jingle, or symbol that identifies a particular enterprise or product. Units of activity method. Depreciation method in which useful life is expressed in terms of the total units of production or use expected from an asset. Useful life. An estimate of the expected productive life, also called service life, of an asset. The cost of land includes closing costs such as title and attorney's fees. True. The cost of equipment consists of the cash purchase price, freight charges, motor vehicle licenses, and accident insurance on company vehicles. False. Recognizing depreciation on an asset results in an accumulation of cash for replacement of the asset. False. The units of activity method can be used for airplanes, buildings, and furniture. False. The declining balance method is considered an accelerated depreciation method. True. The Internal Revenue Service requires the taxpayer to use the same depreciation method on the tax return that is used in preparing financial statements. False. The IRS does not require the same depreciation method on the tax return that is used in the financial statements. True. To determine the revised depreciation expense, the company computes the asset's depreciable cost at the time of the revision and divides it by the asset's remaining useful life. True. Companies generally use the units of activity method to compute depletion. True. Goodwill is the excessive cost over the fair market value of the net assets acquired. True. The gain or loss on exchange of plant assets is the difference between the fair market value and the cost of the asset given up. False. The gain or loss on exchange of plant assets is the difference between the fair market value and the book value of the asset given up. True. Plant assets decline in service potential over their useful lives except for buildings, equipment, land improvements. Land. The cost of land includes all of the following except real estate brokers, commissions, closing costs, accrued property taxes, parking lots. Parking lots. Factors that affect the computation of depreciation include all of the following except cost, book value, salvage value, useful life. Book value is the cost of an asset less its salvage value. Depreciable cost. The depreciation method that produces a decreasing annual depreciation expense over an asset's useful life is the declining balance method. The method that ignores salvage value in determining the amount of depreciation is the declining balance method. When a change in estimated useful life is required, the company makes the change in current and future years. Ordinary repairs are expenditures to maintain the operating efficiency of a plant asset and are referred to as revenue expenditures. A gain on sale of a plant asset occurs when the proceeds of the sale exceed the book value of the asset sold. Natural resources include all of the following except mineral deposits, oil and gas deposits, standing timber, land improvements. Land improvements. Companies amortize the cost of a patent over its useful life, legal life or its useful life, whichever is shorter, legal life or its useful life, whichever is longer. Legal life or its useful life, whichever is shorter.